Uh, Good evening, all of you. Uh, Very respected participants. I am addressing first to the participants and coming to the speaker for the first session. And Prerna and the moderators Kajol and Chandni. Myself, C. Preeti Savla. I am chairperson of Women and Young Members Excellence Committee of Institute of Chartered Accountants of India. And as a chairperson, it is always my wish, and I believe we can do the best for our members who fall in this category of this committee. All the committees have widespread their uh, members' strength, but here, being at WYMEC, we have restricted to either women members and also the members, all the members up to the age of 35, as it says, young members. And in our journey as WYMEC, we have analyzed that we want to do some course which is useful because we have analyzed that a lot of members earlier were in job and wants to come in practice, and there are a lot of changes in the practice. Again, a lot of women who were earlier either in job or practice, they have taken break and wants to again restart their career after a gap of couple of years. And a lot of new technology has come, new laws. If you see last 5 years, lot of new laws have come, like insolvency and bankruptcy code, then valuation. GST has come in 2017. The entire litigation practice has changed because the assessments and all were earlier in physical mode, but now everything, lot of things are on online mode, like assessments and other litigation areas. The technology is playing very important role after COVID, as we have started the also the campus placement program last year. That was the first campus placement program for women on flexi and part-time hourly basis. And we have rather received very good response from the companies, where 80 plus companies have enrolled to get this kind of members on flexi hour and part-time basis. We have got 1,600 women members registration for the same. However, uh, the members who have enrolled, however, they did not opt for even interview also. And the members who have opted for interview, some or the how few members have not received the call also. So we thought, okay, let us have some series. And this series we have told, let us have unleash your potential. We have very high potential among ourselves. And if we actually see and work on that, we can do wonders in our career. And that is why we have started this series from today, which is named as Unleash Your Potential, where we have a group of some 10 plus members devised the series which will cover GST, income tax, India's standards on auditing, company law, international taxation, where practical training will be taught how to actually do the things which is required in office, how to do the sub advisory role, or practically the compliances part in all these areas. And with this practical knowledge, we feel that members' knowledge will be upgraded. They'll learn how to actually practice, how to do the necessary things in the industry in that specific areas of work. Again, after the completion of the all technical topics, we have also kept some soft skills, so which will upgrade the soft skills and the presentations of our members who want to take the benefit of same. So this is our endeavor. So now when the next campus placement we are organizing, we thought we should complete this type of programs so that our members are more equipped with the knowledge, practical knowledge, and then can perform more better in our campus placement programs also. And more number of members can get the job opportunities in campus placement. This is not only for the campus placement. Even with this series, you will be actually can do practice in much more better manner, because this entire series will cover the practical trainings. So I feel this will be very useful, and we have kept this series on every Monday, Tuesday, and Thursday, 4 to 6, so that you can plan and manage your timings in such a way that you are taking the benefit of this series. The videos of this series will also be uploaded for the benefit of members and can then be viewed at any point of time. And friends, if you have any feedback, please feel free to connect, put in the chat box. We'll take all your suggestions. So today we have with us a chairperson of Gandhidham branch, Chandni, and Vikasa chairperson of Vapi branch, C. Kajol Shah. So like that, we have women leaders in all the branches. There are about 45 women leaders. And all the days, at all the days, we are trying to cover all the leaders of our women fraternity from all the branches and study circles, so that they will also get opportunity to interact with all of you. And definitely the speakers, we have the excellent speakers across India for this series. Will be sharing their practical experiences when they are actually doing the work in their practice. So I this unleash your potential. I truly believe that you will be able by attending this, and no only attending is not sufficient, friends. Please actually enroll, imbibe this practice in your routine, so that it will be beneficial and you will definitely reach the goal which you want to achieve. We are also planning to bring RRC in the month of June. The last weekend of June we are planning residential refresher course. We are also planning to bring one program on independent directors, women independent directors, 2 days program. We are also planning to bring a workshop on leadership, where we'll have only 30 members workshop. It will be the workshop only for 30 members, and it will be the paid workshop, and it will be online. We are bringing the people from across country in the leadership workshop, so you can take the benefit. With these words, I inaugurate this series. I wish you a very happy learning. Thank you very much.
Thank you, Preeti ma'am. Now let's move forward. First of all, thank you, CA Preeti Savla ji and ICAI for giving me the opportunity to introduce such a young and dynamic speaker, CA Payal Shah. CA Payal Shah is a young professional practicing in various facets of indirect taxes, including GST and customs. Having strong background of indirect tax, she is handling past litigation of central excise and service tax. With the advent of new RERA, she has ventured into RERA apart from indirect taxes. She is currently a director of GST In Time Service Private Limited, which is a rapidly growing firm of Indian origin, having presence in East, West, and North region of India. She has been a part of various tax firms earlier, such as Sudik, Parekh and Company, BDO, and EY. Apart from having a bright academic record, she has also achieved various professional milestones in her career in last 1 decade and has gained a rich experience of consultancy, opinions, and litigations. She is a regular speaker on indirect tax and has a privilege to address various professional forums, including industrial forums such as WIRC, the Chamber of Tax Consultants, Bombay Chartered Accountants Society, Sales Tax Practitioner Association of Maharashtra, Exim Institute, GCM Worldwide, CVOCA Association, and Executive Research Association, which is a trade organization. She has also provided training to department representatives at NACEN, National Academy of Indirect Taxes and Narcotics. She has co-authored the book Key Rulings under Indirect Tax Laws, a GST Perspective, published jointly by Chamber of Tax Consultants and Voltas. She is instrumental in authoring articles and updates for various professional journals published by WIRC, Thane Branch, and Bombay Chartered Accountants Society. She has been a regular faculty for GST certification courses held by Exim Institute. Apart from profession, she is also engaged in a social welfare activity through the association named Young Sevaks. It gives me immense pleasure and immense happiness to have you today, ma'am. We all would definitely gain from your experience, and you are really inspiring to us that women can achieve at such a young age such good qualifications and such good achievements. Thank you, ma'am, and a very welcome. All the dice is yours.
Thank you, Kajal. Thank you for wonderful introduction. First of all, thanks to ICAI and Women and Young Committee of ICAI, and also special thanks to Preeti Savla. All of them combined have come up with a very wonderful series, I would say, wherein they are going to cover up various topics. So if you are starting something new, or even if you are in practice, but you feel that, okay, you want to, for example, I am into indirect taxes, but I would definitely like to see that what happens, when it comes to Ind AS or when it comes to direct taxes. So this is a wonderful series being designed by ICAI and this Women and Young Committee, wherein you will be able to even see the practical aspect of all other subjects. So wonderful initiative by this committee. And thank you so much, Kajal, for wonderful introduction that you have done. And so just to say that though I don't look young, I am still young. All right, that's the only thing that I can say about myself right now. Should I straight away start with the session? Yeah, okay, thank you. So let me put down the slide. Let me know if you can see the slide.
Yes.
Okay, thank you,
It's
Kajal.
visible.
Yeah, okay. So yeah, when we were discussing that, yeah, we have to unleash our potential. So this was the first picture that came to my mind, that yes, there are two people who are helping each other, but in a fighting spirit. All right, so that's how it's going to be. GST, you all are aware, it got introduced in 2017. Until now, the journey has been like topsy and turvy. So when the model law came in, we all were very excited to see that it is going to be a new law in country, which will definitely resolve various problems. It did resolve some of the problems. Some of the problems it couldn't. And obviously, some of the new problems came in considering that it is a new law. So as Preeti ma'am also said, that still there are going to be a lot of litigation area, which is going to be a potential area for GST for a few years to come now. Since the tribunal is yet to be set up under GST law. It's just that you are appearing till Commission of Appeals. All the pending cases will be heard in due course once the tribunal is set up. So that that itself was under a challenge. The constitution of GST tribunal itself was under a challenge. So you all can think of where the entire litigation under GST is going to go. Coming back to my session, what we are going to discuss today is more or less, first I'll just put it that we are going to first start with the concept of supply. We are going to then discuss a little bit on the composite and mixed supply. We'll then move further to exempt and non-supply also, non-GST supply also. And we are going to discuss certain case studies around all these topics that we have put down. We'll discuss about what all things are considered to be deemed as a supply. Some of the transactions under GST law are categorized as specifically either as goods or either as supply of services. So those things we'll discuss. Then we'll discuss few transactions which are not covered under the purview of GST itself. We'll also discuss whether everything is covered under GST law or not. And then we will then move further to say that, okay, what is the concept of this IGST that we talk a lot nowadays? Okay, and then lastly, we'll discuss about some of the place of supply provisions. So this is the flow of today's discussion that we are going to have. So now, the first and foremost thing we are discussing a lot under GST on supply. Every day that we look at any particular return that we have to file, we first think that okay, whether the transaction itself is a supply or not. If yes, then all the transactions, everything, then you will have to look at the reporting to be done. You will have to look at the implications under the earth. But whether it is a supply, and if you are able to somewhere carve out to say that okay, it's not a supply at all, okay, then it is going to be wonderful area for you to practice as a consultant. And that's why this topic becomes very relevant here. Okay. We will discuss about the gamut of GST, and then you will realize that everything is covered under GST law. And then we'll discuss about are there any possibilities to come out of GST law. Okay. So I've given very simple example here. Selling of personal car, whether you will treat it as a supply. Normally, no. Normally, you will say, no, it's a personal asset. So it should not be considered to be a sale of car by an SSE, and therefore should not be covered under GST law. That should be your first impression. The second question is use of search engine, internet charges which you are paying to the telecom service provider. Whether that everybody is using, everybody is using internet, everybody is using some or the other search engine, and you must be paying to various parties. So whether those will be covered under the term supply. What are they supplying? Are they supplying any service? And the third one is again interesting, where doctor normally is obviously, treating you, and while treating you, they might give you some medicines also. So to that extent, we understand. Now, the question which we have put down is from the angle that if it is a doctor, and if he is selling any scrap, he or she, for that matter, is selling any scrap, then whether you will, then that also will be covered within the scope of supply or not. So these are few questions I have put in. If anybody wants to reply, they can put on their chat boxes, and then Kajol here or somebody else from the tech team can at least just reply back to us. Okay, so first question is on the selling of car, personal car. Second is on the use of search engine, and third is on the doctor selling the scrap. You can put your answers if you can think of. Okay, now I will just move to one case study further, and then we will move to the concept of supply. So this is a transaction which practically happens that, okay, I am purchasing car of 10 lakh rupees. So this, you have this exchange offers nowadays. So for that, what happens is I have given my old car worth of 4 lakh rupees. I have paid some monetary consideration of 3 lakh rupees, and I am purchasing car worth 10 lakh rupees. There are various angles to it. You can think, first of all, whether it is a supply at all. So I think more or less you will say, yes, it is a supply. So from the car dealer to Mr. Mohan, obviously, though Mr. Mohan might be purchasing the car for the personal use, but whoever is selling the car, obviously he is in the business of selling the car. So therefore it should be treated as a taxable transaction. Now, the question is, here there are two considerations involved. One is the monetary consideration of 3 lakh rupees that you're getting. Another is non-monetary consideration of 4 lakh rupees you're getting. And the interesting part in this transaction is that though you are getting 7 lakh rupees, the car which is being sold is worth 10 lakh rupees. Okay. So I hope now you understand that, okay, this is very simple transaction normally, which is happening in day out. But from the angle of taxation, you can see certain complexities, whether it is a supply, then whether what amount, you will consider as a transaction value, 10 lakh rupees, 4 lakh rupees, or 3 lakh rupees. And then, further questions will come how to report in your GSTR 1, 3B to the government in a way that, you don't get more queries. And if you get more queries, at least you have some resolution to it. So that's something that you need to think from the angle of GST law. Okay. So here I would just like to conclude right now on this. I will come back to these two slides once again, once we are completing our discussion. I would just like right now to give you some thought process that, okay, just think from the angle that whether if it is a transaction, it is the same sale of car, but if it is from an individual person, like I have a car and I'm selling it to Kajal. Okay, that could be one transaction. Another transaction could be that Kajal is purchasing from a car dealer. And what will be the difference? Okay, that is one thought process or one line of thought that I'm giving it to you. So, yeah, and this another case study we have put in is from the angle of that, okay, if somebody is taking the services from outside India. So he is again an individual, Mr. Rohan is an individual, taking services from outside India to just design the house, and the person from whom he is taking the service is situated outside India, he is charging you $10,000. So in this case, whether this will be treated as import of service. Okay, these are three questions I have given. Normally, what do we consider as supply is that here we have also given that in one of the judgments, which is a very old judgment, just they have discussed about the concept, and this concept is important, that how we look at it. We have seen this supply word earlier, not under GST law, but under economics a lot, demand supply, if you remember. So how do you perceive supply if there was no GST in place? So common sense says that supply will be considered to be the ideal of furnishing or providing to another something which is wanted or required in order to meet the wants or requirements of others. So whenever we talk about demand supply, we talk about, okay, somebody wants to take something, and that person will be benefiting out of it, and somebody else will be taking something else. That is considered to be supply. So it is much more than only the physical control which we talk about. So for example, it's not the delivery and the supply. If we have to distinguish, these are two different terms. Many a times we also confuse ourselves with movement of goods versus supply being happening. Okay, so supply in the way it is mentioned in the law, it has much more potential compared to what you will say only a delivery or only the movement of goods. Okay, we'll discuss further. So what they've said is supply means every form of supply. So this is the exact definition, and then we'll go to the earlier slide. It says that supply includes all forms of supply. And then it says of goods or service or both. So just to highlight that many a times we read this goods or service, we leave this word or both. Okay. And there is a meaning to it. Every word which is given in the law will have some meaning, and we need to know what is that meaning. So here what they are trying to say is either if it is supply of goods or if it is supply of service, or even if it is a combination of goods or service. All three are covered under the GST law. Now I'm just putting you one thought. If it's a transaction of service with land, whether it is covered under GST law? Ideally, no. Then why are we paying on the construction service every day? In the construction service, when you're taking from builder, you are taking service as a construction service, and you're also getting undivided share of land. And still we are saying always that it is covered under GST law. And there are schemes to it that 12% you will pay or 5% you will pay. If it's a construction of commercial complex, then you will pay at higher percentage, right? So whether it is a supply itself is a question still, which we should think of when they talk about all forms of supply, and it is of goods, service, or both. Okay. Then they have talked about what kinds of supply that they are intending to look at. So it includes then sale. That is a pure simple version which you will see. Then it will be transfer. So even if there is a transfer in property of goods, that also is covered here. Then if it is barter, that is also covered here. Barter meaning that, okay, you are giving something and you're getting something. Whatever you're giving and getting, it is not in the form of money. Okay, so in those cases also they are saying that it will be treated as supply. Exchange is also considered, and barter and exchange, please understand that there's a difference in these words. Barter is different and exchange is different. So a barter means that, okay, I'm giving you maybe, I would say for exchange, I can just say one difference between barter and exchange, that in exchange, you actually assign some value to the goods that you're giving. In barter, you just, for example, I'm giving you watch and you are giving me, maybe car also. Well, so there we don't put any valuation in the barter transactions normally. Though in GST law, obviously you have to go through the valuation rules and then you have to determine the value. But in exchange, what happens is you have assigned, for example, I'm giving you 10 grams of gold worth rupees, 1 lakh rupees. You are giving me watch, which is maybe latest version of whatever, Samsung, etc., and it is worth maybe 50,000 rupees. So that's how you will exchange. Then the license is also covered under supply, and the rental is also covered. So even if you're renting out any goods or services, that itself is also covered. Even the lease of goods or service or disposal. Disposal again is a very wider term. We'll also discuss when we will come to deemed supply concept. So these are few of the types of supplies which are put down under the law to say that okay, if you're doing sale, transfer, barter, exchange, anything, then if it is made or agreed to be made for a consideration, so there has to be a consideration in whatever form the consideration maybe, there has to be still a consideration. And third most important requisite is that it has to be in the course or furtherance of business. So when all three are put together, met, then only you will treat any transaction to be a supply transaction. So now let's go back and check again that whether whatever things we had discussed, whether it will be treated as supply. Selling of personal car, is it a supply of goods or service? Is it made for a consideration? And is it in the course or furtherance of business? So first is not a supply because it is not in the course or furtherance of business. Okay. So now we again go back. We'll look at other things and we'll come back. Yeah, this is only a slide wherein we have put down what exactly do you mean by all these things. So I'm not repeating because we have many more slides to cover with less of time. Now the 71AA talks about a deemed value, or rather the supply, deemed supply between a society and the member, or any, I would say any club and the member. So what they're talking about is the activities or transactions. Here the word supply is missing. Okay, here they are only saying any activity or transaction by a person other than an individual to its members or constituents. So therefore you say that it is a club which they are talking about, because club, they will put it to members, society, then it will be to the members or its constituents for cash, deferred payment or other valuable consideration. So if there is any consideration attached to any activity or transaction being done by any club or society for their members, then that is what is covered under this 71AA. And then obviously they have given an explanation to say that, okay, if it is anything which is given in the code, they'll not consider it. They will still consider the club and their members as deemed to be separate persons. We'll talk about it. There are separate slides to it that, okay, how do you perceive this particular transaction? Then the second or rather third point, which is considered to be supplies, import of service for a consideration, whether or not in the course of furtherance of business. Now here, there has to be an import. So there has to be some supply which is envisaged. The consideration is also envisaged, but whether or not in the course of furtherance of business. So the third constituent, which is normally required, that it has to be in the course of furtherance of business for import of service, that is missing. Okay, so now again we go back. Use of a search engine, internet service. So if you are importing as an individual, importing any service, which is not in the course of furtherance of business, for a consideration, it is actually considered to be a supply. Okay, so from outside India, if you are getting any subscriptions like Microsoft, okay, or Google for that matter. So even if being individual, if you are importing any particular service, Google now obviously has their own Indian, entity from where they are billing. You need to check when you're taking subscription that from where you're getting. So even if, for example, your clients you're looking at who are proprietors, or even if they're not proprietors, individuals, but if they have taken any particular transaction like this, which is kind of a subscription, and even if it is not in the course of furtherance of business, then you will have to see that the other party is outside India. And if it is import of service through the place of provision rules, then you might have to pay GST under reverse charge or mechanism. So it's a very odd proposition which I'm talking about, but that's how the law is there today. And the last one they are talking about is now the deemed supply. The activity specified in Schedule 1 made or agreed to be made without a consideration. Now here they are not talking of any supply, etc. They are only saying activities or transactions. In fact, or transactions is also mentioned here now. And then whatever is specified in Schedule 1, and it has to be made, even if it is made without consideration. That is also covered under Schedule 1. Okay. So it's considered to be a deemed supply. Whether or not there is a consideration, it will be treated that it is a supply. Is the definition of supply inclusive? Yes, it is inclusive. We see that supply includes, okay. All these things, if you see, all of it are inclusive. So something can be much more than this. Whether it includes what is not listed in section 7I, yes. The natural meaning of supply, okay, remains as it is. Over and above that, this definition you have to read. So therefore, we earlier read this particular judgment of House of Lords where we discussed what do you really mean by supply. And then we talked about what is the definition under GST law. So both put together, you have to read whenever you look at the definition of supply under GST law. Okay, that's what I'm trying to say. Now, obviously, if it has to be supply of goods or service, the definition of goods and service become important, and that's what we have put down. So goods will mean every kind of movable property, which is almost, I would say, the definition is quite similar to the Sale of Goods Act that we have seen. And then it includes even the actionable claims, growing crops and grass and things which are attached to or forming part of the land, which are agreed to be severed, okay, before. So that is something which is covered under the definition of goods. Please understand that money, that is your coins or your, no, not the coins which have of a greater value, but the normal coins which we use it in the day-to-day transactions, that is covered out of the purview of goods and service. And even securities, for example, shares and your mutual funds, etc., those units, those are also not treated as goods or services. But there are certain transactions around securities and money which are covered under GST law. For example, if it is money exchange services, then that is still covered under GST law. Now, under the service is, now this definition is little bit where I would say the major litigations right now are also going on, and it will continue in future also. That what do we mean by service? Service means anything other than goods. Goods has a very specific, tangent to say that, okay, it has to be movable property. It will include actionable claims, and then it will also exclude money, security, etc. Service has a much wider connotation when we look at the definition. It means anything other than goods. And then it includes activities which are relating to the conversion of money, use of money, which we were discussing. So here, what is most important aspect to understand as an assessee is that if suppose, and whenever you're looking at any client's balance sheet or P&L, for that matter, you're looking forward to, okay, this is a service, this is an income which is taxable, this is an income which is taxable. Then you come to something which you feel that it is neither goods nor service. So generally, you will tend to leave that item aside, saying that, okay, for example, it is dividend. If it's a dividend income in your trial balance, then you will say, okay, this dividend income is actually transaction in money. So it's not covered under GST law, or it is for securities purposes. So it's not covered. So fine, that to that extent we understand. What if it is surrender of tenancy rights? Is it goods? Is it service? What is it? Then you will say, okay, it is not a movable property, or if the, those particular rights are pertaining to immovable property. And therefore, then you will move back to the definition of service. And then so you will say, service means anything other than goods. So even those rights will be treated then as service. Okay. And then you will say, okay, I still need to pay tax. So that could be a weirdest interpretation which can come. Obviously, there will be various arguments which you will have to take to decide that whether the transaction is to be treated as service or not. But I'm just trying to give you a broad idea that somebody can consider even the rights, tenancy rights, to be a service transaction. Okay, then obviously if it is a transfer or not, whether it is a supply or not, those things will have to be seen. But per se, tenancy rights, whether it is a right in immovable property, whether if it is not goods, can it be treated as service, becomes a very big question mark. And that is where the litigations will lie in future. Now, service definition, as we saw, talks about anything other than goods. And therefore, your definition of anything becomes very important. So obviously, we have put down 2 questions. Can we say that following a service, Mrs. X cooks every day for her husband? Can we say that she is providing service to her husband? Anything other than goods? Mrs. X is cooking for her husband without consideration. So you need to look at deemed supply. Mr. P bangs his car to Mr. Q and pays him compensation. Is it that Mr. Q is actually providing any service to Mr. P? Obviously, there was a crash of the car and some compensation is being paid. Is there a service being provided by the other party? So that is something that we'll look at. We'll talk about this. So there are few gray area transactions where this definition becomes important, where you need to say that, okay, anything other than goods, how do you read this and interpret this? Okay. So there will be various such transactions which you will have to look at and to decide that, okay, anything other than goods, how do you read it? So there are I would say judgments around this area, and many of the judgments talk about. So, for example, the second, I would say bullet which we have put in, the word any in the context can mean all, but also means some. Okay, so it's very confusing word, everything and anything. So whether every will include anything, or rather anything will include everything or not, is a question mark here. Okay, and that I think will be decided by courts over a period of time. My view is that everything cannot be considered to be anything cannot be considered to be everything. Otherwise, there was no need to put so many definitions. You could have just said that, okay, every supply or every transaction or activity will be treated as supply. That's not the definition which has been provided. And therefore, in my view, anything other than goods needs to be still, I would say that definition has to be interpreted to mean that the nature of transaction has to be still in the nature of service. Then only you can treat it as service, not otherwise. Now, and to answer that, the surrender of tenancy rights, in my view, though tenancy rights may be treated as service, but if it is done by an individual, you can always take a very strong argument to say that it is not in the course or furtherance of business, and therefore surrender of tenancy rights or transfer of tenancy rights should not come in picture when it is an individual doing the transaction. When it's a commercial entity doing transaction, you definitely have to think about, because there are circulars which are against the assess in those cases, but it's a case which you should fight, and you have to fight, I would say, until the last level of the disputes, so as to get the matter settled by the courts only. Now we had discussed this. Now we have discussed the first limb, which is all forms of supply of goods or service or good in a very detailed manner. Now I will just like to talk about import of service. We have discussed this also. We'll go to schedule 1 now. Just a minute. Yeah. Okay. Yeah. Okay. We'll first talk about the definition of consideration, and then we can go to the schedule 1. No problem. So now the first limb of transaction, we discussed that it has to be all forms of supplies of goods or services. So we discussed about goods or services. Then it has to be for a consideration. So therefore, the definition of consideration is then, we have picked up. So consideration, if you see this A and B, the A is talking about everything which is in monetary terms. So if it is a payment which is done in money or otherwise, in response to, or for inducement of supply of goods or service or both. So now this new word of inducement has come for the first time in the indirect tax laws, or I would say, or so to say, GST law. It was not there in excise, or not in service tax, not in even VAT laws for that matter. So this inducement is a very wider term to say that even if I'm inducing you to purchase something, that also may be treated as consideration. And therefore, you need to be very, very careful that even if it is a monetary transaction, or even if you feel that, okay, it's still at a negotiation stage, that, you are discussing some pricing around that area. And if you are inducing the other person to purchase the goods for some different methodologies or some other incentive schemes or anything also, you may have to think that whether that other scheme which you are giving, will that also be treated as consideration, and will have to pay GST on it or not. So, sorry. So here the term consideration is, I would say, defined in a way which includes monetary consideration, non-monetary consideration, and sometimes certain inducements which you might not consider it to be consideration, okay, in normal sense. So therefore, the definition of consideration is also made quite wide. So whenever you see that there are any monetary transaction in the trial balances wherein you are paying money, you need to figure out whether there will be any reverse charge liability. And if you have received any such compensation, for example, if you have received, then you need to see that whether that compensation which is received in the form of consideration or not. Was there any corresponding supply to it? So the supply and consideration need to have an intricate link. Then only you can say that that transaction will be taxable under GST law. So just because you are seeing compensation, in the trial balance, don't jump to a conclusion that it has to be covered under GST law. In fact, recently in the August 22, there was a circular which had come. Specifically, they mentioned that if it is in the form of liquidated damages, you might be still out of the purview of GST law. So whenever you are applying the definitions of consideration and supply, just keep in mind that the consideration has to have a direct link with the supply that you are making. Since if there is no supply, for example, just the amount is being received in your trial balance, you're seeing those entries, just try to figure out what is the nature of transaction. If there is no direct link of supply and consideration, it might be still out of the purview of GST law. Now, the second point which they have mentioned in this definition of consideration is monetary value of any act or forbearance. So here they are talking of even if you're doing any act which is not in monetary terms. So even non-monetary consideration is covered under this particular definition. So the definition is made so wide that whether even if an act or forbearance is done, that is also equated with the term consideration. Okay. And only only way out when you want to come out of these transactions of saying that, okay, it is a consideration, the main way out which they have told the assessors is that if it is a deposit, if it is not towards any supply, the amount that you're receiving is not towards any supply, but it is just a deposit which you have received. For example, if it is a normally you will consider it to be refundable and non-refundable. There could be two deposits that you can receive. So for example, you have received a non-refundable deposit. Then at the time when you're appropriating it before your supply, that is the time when it will be treated as consideration, and that is the time when your GST liability would arise on this particular transaction. So for the matter, for example, we consider a very simple transaction of renting of immovable properties. So renting of immovable property, there was a problem in service tax law. In GST law, it is treated as a service transaction. The moment you say that it is a service transaction, the right to occupy any particular premise is being given. Okay. Then you will say that it is, if it is in the course of furtherance of his business, then it will be treated as a supply. Okay, fine. The moment it is a supply, then the question comes that what is the consideration? Now, in this case, for example, you have received a refundable deposit, then that deposit will never be considered to be consideration. But if it is a non-refundable deposit and it is said that, okay, you adjust this in the last 3, rents that I'm going to pay you. So in those particular cases, those last 3 months when you're adjusting. So for example, if the leave and license agreement runs into 12 months, out of that 9 months, obviously you are going to receive the monetary consideration, and then you will discharge GST on it. For the last 3 months, what you will do is you will make the entries of adjustment in your books of accounts. The moment you're appropriating those amounts as your income, that is the time when you will treat those deposits as consideration, non-refundable deposits as consideration. And then at that time, you will discharge GST. That is the time of supply also for this transaction, because at that time, it becomes consideration. So the entire definition of supply is fulfilled at that time. And therefore, the time of supply, then accordingly, we will go as per those time of supply provisions. I hope now the things are very clear to you. We discussed that there has to be a supply, there has to be a consideration. We also, third thing that we discussed about supply is that it has to be in the course or furtherance of business. And therefore, the definition of business also is equally important. Now, business here includes any trade, commerce, manufacture, profession, profession, vocation, adventure, leisure. Okay. So even if it's an adventure, that also may be treated as business. Okay, so sometimes you may say that, okay, it's a very new idea or a kind of venture that I'm doing, or you are just doing it maybe for temporary purposes. So those are not the criteria to be seen, whether it's a business is a permanent one or not. Whether it is a business or not needs to be seen. So it may be one-off transaction, but if it is in the nature of the trade, okay, then it will be treated as business. Then any activity which is in connection with or incidental or ancillary. So it has to be, if it is either in connection with your normal sub business, or if it is incidental to the supply, or if it is ancillary to any of the supplies that you're doing or business you're doing, then those transactions are also treated as in the definition of business. Then obviously what they have talked about is that it does not matter there is a volume, frequency, continuity, or regularity. As I said, it may be one-off transaction, it may be just a sudden transaction, but if it is in the nature of business, then it may be still treated as the business for the purpose of GST law. Then they have talked about, if suppose you're starting the business, then the question will be there whether it is a business. For example, I am purchasing a plant and machinery and I'm setting up any particular food processing unit. Now, in this case, what will happen is the moment I'm purchasing, there will be GST which I will pay for purchase of those plant and machinery. whether I'll get a credit or not becomes a question mark. The problem is that my supply has not started. So there is no supply which is happening. And obviously, when I'm purchasing the plant and machinery at that time, since there is no output supply, so department may say that, okay, then you will not be allowed to take the credit. So to curb that, what they've said is even the starting of the business or the closure of the business. So commencement or closure we'll talk little separate, but even commencement of the business is treated as a supply or business, sorry, for the matter of GST law. So what will happen is the moment you are even purchasing one single plant and machinery, until you are registered, your claim for ITC is I would say saved. Even when there will be third or fourth session, I think third session on the ITC. At that time, ITC will be discussed in detail. You all must be even aware of the basic concept at least, that ITC you will be able to get the moment it is considered to be in the course of a business. So therefore, to get that benefit, they have mentioned here in the definition of business itself that your commencement of business is also treated as business. So you'll be then, you can take registration on that basis, and then you can definitely start availing the credits. Just keep in mind that you have to have registration to get the credits. Otherwise, it becomes an extremely difficult case. So the moment client comes to you and says that they are going to start some new business, the first thing that you have to ask is what is the time period that you're looking forward to? Because in GST, taking registration itself is a challenge nowadays. You will see it in session 2 as well, that what is the procedure of registration, and every day there is a query on registration. I have seen 2 practical examples recently wherein applying 5 to 6 times, both these cases, they have not been able to take even basic GST registration. So they are not able to even start the business. So whenever you're talking to your clients or your prospects, you just talk to them that, okay, even if you're starting new business, better to take GST registration. And then even if you're filing nil return, it's fine. At least you'll not be losing on the ITC part if you're going to acquire any particular goods or services. Now, on the closure of business, I would just like to give you a practical aspect of it that, okay, when you are closing the business, it depends on the structure of the closure of business that you are looking forward to. But the best part that I've talked about is even closure of business is treated as business. So, for example, while closing your business, if you are just disposing of your plant and machinery, that there also you will have to pay GST on it. So you have to structure your transactions in case of closure of business in a particular way that you are paying minimal liability. And either, for example, if it is a merger acquisition case, then you will look at that, okay, the goods or machineries or the entire plant is transferred in a way that, you have the least liability. At the same time, of course, I'll also talk about closure of business after some time in some of the other slides. And what you have to look into is, for example, if it is actually a closure of business, then you have to look at what is the credit available, how you will be able to, discharge the liabilities completely, and you will be able to file a final return. So therefore, again, the closure of business becomes very important for you. And then you calculate your liabilities accordingly and you discharge so that later on you don't find these queries from department. Recently, we were talking to one of the clients, their head office is at Hong Kong. So they've already closed down their business in India since 2018 in this particular entity. They're then going to another route and agencies, etc. So in those cases, they have a pending litigations which are going on for service tax. So therefore, even GST, they had to continue their registrations. So even for GST also, since they had certain things or demands and notices for the GST also were pending, they had to continue their GST registration. So even for closure of business, you need to structure the clients, I would say, registrations and the businesses in a way that the least GST implications come to the assessee. And last, is wherever the club or association, if are giving facilities to their members, that is also treated to be business for them. Even admission of persons to any premise is also treated as business. If it is for a consideration, for example, if you're going to like Imagica, so then that also will be treated as business for them. Services applied by a person. This I'm not talking much in detail because GH are not much to be discussed. I will discuss a little bit. Any activity or transaction undertaken by central government, state government, or any local authority in which they are engaged as public authorities. So even if they are treated as public authorities, even if when they are functioning as the public authorities, still state government, central government, and local authorities will be treated to do business. And therefore, even if central government is charging, for example, you have a builder client, and then they are getting certain, they are paying certain charges to the governments to get approval. So if you are in his hospitality sector and if you are paying certain, registration fees or certain other charges to the government to get the licenses done. Sorry. Just give me a minute's time. I'm so sorry for the inconvenience. Sorry. So yeah, so even if those kind of transactions which are being undertaken with the government, you are just paying the fees. So normally you will not even think in your dreams that it can get covered under, and I might have to pay GST on it. But for government transactions, it is covered under reverse charge mechanism. And if you have seen even single builder or even a single hotel, you will see that the fees that they pay to the governments are really huge amounts that you pay. Even for infrastructure projects or any particular construction site that you're going to see, even smallest project, you will be paying certain premiums to the government. In all those cases, it becomes extremely crucial for the assessees to decide that on what amount you need to discharge your liability under reverse charge mechanism. Because the government, though, is considered here as business, under business, but then there are other, I would say, provisions under the law to say that you will have to pay under reverse charge mechanism as a business entity for whatever amount you're going to pay to the government. So you as a business entity have to decide that, okay, on all these charges, am I required to pay GST or not under reverse charge? Of course, if you are eligible, then you can take credit. But as you know, in both the hospitality sector and I would say, of course, not exactly hospitality, only hotel sector, the restaurant and the construction, they're not even many a times eligible for the credits. Unless you structure a transaction, you're able to get credits, it's well and good. If you're not able to get the credits, then it's better that you be very careful about this business and the definition of business from the perspective of central government and state government and the local authorities. Yeah, now what you need to look at, I will again go back to my earlier slide where we talked about selling of personal car and doctor selling scrap. Okay, so one was a transaction which was an individual transaction. The another is where you are selling as a doctor, being a professional, you are selling something which is a scrap. Now, whether that will get covered. So now that is where I would say in the course of Adhansab becomes business becomes very important. So here is a press release which has talked about that. Okay, even if there is a sale of old gold by an individual, even if it is for a consideration, then it will not be treated as in the course of furtherance of business, because that individual does not qualify to be a person who is having any business for that jewelry, and therefore it will not be qualified to be supply itself. Okay, so this is something which is equally important, that you need to know that it is in the course of furtherance of business or not. And many a transactions, when you will see the trial balances, you will come to a conclusion it is taxable. Please look at this angle. If you can take it out as saying that it is not in the course of furtherance of business. Now I'll talk about another transaction which I talked about, which is of doctor selling scrap. So most of us would come to a conclusion that even if it is not his business, it is any activity or transaction in connection with or incidental or ancillary to the business, and therefore it will be treated as taxable, right? So what will happen here is that he is not paying a single rupee GST on his actual income which he is getting as a doctor, or as a hospital if he is hospital, and if it is not into some cosmetic and other things, and if it is having a particular limit which is prescribed under the law, then it will be treated as exempt service. So they will not be paying a single rupee, even though they might be making money, they will not be required to pay a single rupee as GST. But when it comes to the scrap sale, you will say that, okay, everything else is covered under exemption. But for this one particular, for example, I have 10 crore rupee of my doctor's income or a hospital's income. And then I will say, okay, the scrap which I will be sold, it is of 10,000 rupees. The first question which will come is whether as a doctor I need to take registration. So then if it is completely, wholly you are covered under the exempt income, or it is a non-taxable income, I'll talk about it after some time, then you will be saying that, okay, I'll not take registration at all, I'll not discharge GST at all, no need to do reporting at all. But the moment there is a sale of scrap, which is even if I would say 1 rupee, forget about 10,000 rupees, then that becomes a taxable supply. The definition of aggregate turnover, which is there in the GST law, is made in a way that you have to cover your exempt supply. You have to also look at what is your taxable supply. So then you will say that, okay, 10 crore exempt supply, 1 rupee, my taxable supply, total is obviously 10 crore, 1 rupee. And then you are above the threshold limit of 20 lakh or 40 lakh, whatever we were discussing. Okay. And you are not completely into an exempt zone or a non-taxable zone. And therefore, for that 1 rupee, you will have to take registration. And you have to do all the compliances, you have to do all the reporting. On the top of it, for that 1 rupee, you will have to collect and pay tax. If you are not able to collect, still you have to pay tax. Okay. So what I'm trying to say is the implication of this in the course of furtherance of business is huge in few of the clients. Now, there is another school of thought that you can have, and which is actually my view, a legal view, if I have to say so, that 1 rupee, which is a taxable supply, whether it will be leviable to GST or not. So in these two cases which I have put down, this Lenbach judgment of Raipur Manufacturing Company, this is of Supreme Court, and then there is Gujarat High Court decision of Morarji Brothers. So when we look at these decisions minutely, in Morarji Brothers, Gujarat High Court, the definition was quite similar. This was a case of Bombay sales tax, not the VAT law. The Bombay sales tax prior to VAT era. There was a Bombay Sales Tax Act. At that time, the definition of business was quite similar as it is right now. And in those particular transactions, it's very specifically said that it, even though there was a sale of car, they said that it is not in connection with or incidental or ancillary. So even if it is a sale of scrap by the doctor, you might have to think. So obviously scrap, in my view, will have to be treated as a taxable transaction. But if I'm saying doctor selling a car, then I might say that, okay, it's a one-off transaction. It is not in connection with that particular profession that he is into. It's not incidental or even ancillary to the profession of the medicine that he's practicing. And therefore, you might be still out of the purview of business and you might be still out of the purview of supply. Okay. It's a very litigative view, which is available in, I would say, but that's what could be also a legal view. So you have to decide and I would say, try to structure the transactions in a way that it is the least heat on the transactions that we are discussing. But if you feel that, okay, I don't have any way out, then you can try to think that whether the SEC wants to litigate, and then you can take this aggressive position. Now I'll come to certain transactions which are treated as supply, even if there is not a single rupee consideration. So if, for example, doctor, rather than selling scrap, if disposes of without any consideration, it just disposes of some of the consumables it has, those gloves and everything, assuming it does not, they don't want to use it and they just want to give it away to somebody. Then in those cases, this schedule 1 will hit. The schedule 1 says permanent transfer or disposal of business assets where ITC has been availed. So if suppose on those hand gloves, the ITC is availed, then if there is a permanent transfer or even disposal for that matter, even if there is no consideration, they treat it as supply and you have to pay GST on it. So we many a times say that in these kind of transactions, you have some value assigned to it, a little small value, and you then sell it and then discharge GST on it. So there will be much less dispute that you will have as compared to normally if you don't look at those transactions. So what I'm trying to highlight is this particular schedule is a kind of schedule where you will go beyond books. It will not be reflected most of the times in your trial balances. You will have to ask assessee that if, for example, if there are manufacturing concern, you will have to ask them how your wastage is getting disposed of. What are the chances of, you supplying certain things, or what are the chances that this particular amount or this particular transaction that you are, for example, you have as a factory, you have waste of maybe it's a textile industry, for example. And if you have chindis, okay, which you want to sell. Now those chindis, if you're selling, or even if you're not selling, you just want to dispose of. So in that, those cases also without consideration, this clause will be hit. So we would always suggest that you have maybe, I would say 100 kgs of chindis you sell, but have some small fixed price to it. And then you discharge GST on it. The moment you're discharging GST on it, your transaction or your life will become much more simpler, I would say. You'll not have to face various litigations which you will otherwise face. Okay. So that is why this first clause is very important. And you can structure your transactions in this particular way if you get any manufacturing concern, or even for that matter, trading concern, wherever there is a scrap sale, etc. Or even if, for example, if it's a car sale, which we were discussing. So there also this becomes important that if you have availed ITC, normally on car, you will not avail. But if your nature of business is such that you are availing ITC on car, Then if you are then disposing of, then you dispose of in this particular way that there is a least hit of the least hit of this particular schedule 1, if it is without consideration. If it is with consideration, if you're selling it and if you have taken any particular higher percentage, then obviously under the other provisions of ITC, you will see in the later parts of the sessions that there is already some formula which has been prescribed for the ITC as well. Okay. Now the second portion is wherein this is very much highlighted clause now again. Supply of goods or service or both between related persons or between distinct persons as specified in section 25 when made in the course of others of business. Now this I will take 2 minutes and then I would try to move a little faster. Now here what is important is all that cross charge that we discuss a lot about under GST law is covered under this clause. So what we are trying to say essentially is if there is a branch, maybe for example in Karnataka, another branch in Mumbai. Now both of those people are doing this transaction relating to some taxable service. Okay. Or maybe you take a case, I'll give you another case wherein branch is in Karnataka, head office is in Mumbai. The head office is actually exporting services. Now to export those services, the head office is taking some support from that particular branch. Branch does not have any independent billing at all. In that case, there is no revenue generation from that branch. It's a cost center typically for that particular entity. Still, for the purpose of GST law, they say that first of all, Karnataka and this Mumbai will be treated as separate persons. And then it also further goes on to say that you will have to obviously obtain 2 separate registration, though it is one nation, one tax. Still, you will have to obtain 2 separate registrations under GST law. And then they say that from Karnataka to Maharashtra, it will be treated even if there is no, even if you are doing any supply, may it be either of goods or services. And if it is in the course of others of business, even if it is without consideration, it will be treated as supply. So even if branch is just supporting head office, there is no taxable transaction per se. But since there is a support which is being provided, if it is in the nature of supply of a service, then it will be considered to be a deemed supply. You will have to pay GST on it, even if there is no money attached to it. So therefore, this is a very litigative clause. Ideally, I would say, it is a non-natural person. I would say it's not a natural person. And then one legal entity also being divided between 2 particular states under GST law for GST purposes is very, very difficult to understand. So in the initial phases, everybody faced a lot of troubles. Even today, I would say there are lots of cases where this issue is alive for the past period. You all must be aware that today we are getting notices for 17, 18, 18, 19, 19, 20. These are 3 years which are going on right now with department for the assessment. Maximum client 17, 18 is already over. And this was the biggest point which has been taken up by department. Is there a cross charge which is being done between these particular entities whenever there is a taxable transaction? So what happens is one particular person, one branch, I would say, is then billing to HO artificially for some particular value. Then HO further bills it to branch for whatever support they do. So it becomes a very complex transaction per se. So when this law was introduced, I think in my view, the intention was to move the credit with the goods. Okay. And therefore they said supply of goods. So the intention was that if there is any supply of goods between related party, also if it's a branch transfer of goods, then it should be treated as a taxable transaction. But the way they've drafted it, even supply of service is covered. And that is where I think the whole issue has emerged. And now though I'm not saying that it's a right or legally correct view, but department is continuously taking a view that if there are 2 branches or 2 HOs, definitely, I mean, one HO and branch or something, some combination of more than one premise in different states, then there is bound to be some supply which you are going to do with each other. And therefore, it's better that you pay GST on it. Now, the only better part or good part until now has been that the value, they have said if the recipient is getting credit, then whatever value you will put, it will be accepted. So, for example, if it's a CA branch of another place, for example, CA, me having a branch in Karnataka, there is no major issue. You can still charge, for example, 10,000 rupees, you pay GST and then you close the matter once for all for the entire year from here to branch and branch to HO. But what if it is a transaction wherein the recipient is not getting credit? For example, we talked about hospitals. In those cases, if hospital has another branch in another state, like Karnataka, And then in Karnataka, some of the doctors are also remotely doing some consultation for Maharashtra clients, etc., etc. In those cases, what will you do? Will you then say that, okay, there is still a supply of service between these two branches? And since now here the credit is not available to the recipient, you have to actually go to the valuation, which is the actual market value of that transaction. And for this kind of consultation service, it can be 10,000 rupees, it can be 1 lakh rupees, you never know. So it's so subjective. First of all, supply of service to related person itself is subjective. And on the top of it, whenever there is no credit available, then the valuation itself becomes very subjective, I would say. And then the matters of debate and discussion will go on for that particular thing. So my suggestion would be in these cases, practically, that you structure the transactions for your clients in a way that wherever there are multiple locations involved, try to have some kind of cross charge and try to cover yourself within the law, unless there is a major problem of the credits. If there is a problem of the credit, you need to restructure the transaction so as to reduce the liability to the minimum, or else you challenge this provision and take it to the courts. Okay. And the last, okay, one is wherein there is if there is a supply between agent and the principal and principal to agent, then for the goods purposes, it is also covered under the deemed supply, irrespective of your consideration being there or not. And if there is any import of service, which we were discussing, from a related person, then that's also covered under the GST law, even if it is not without a consideration. So all these aspects you need to keep in mind whenever you are dealing in GST law. It is beyond books that you are going to see these transactions generally. So for example, your supply of goods by the principal to agent, if it is without a consideration, you'll only be able to see only through the stock records. Not so if you don't see stock records, don't see fixed asset register, or don't see your sale of scrap related things. If you don't see your branch and HO related transactions which are happening, then it will be very difficult for you to even give any advice to the client. So my suggestion is look at those, or ask, have some particular questionnaire which is available with you, which you will ask to the client, so that if there are any such transactions, at least you will get to know that, okay, there are type of transaction you have to look into beyond books of accounts. Now we'll talk about few transactions which are completely outside the purview of GST law itself. So these are few of the transactions wherein GST is not leviable. First is if there is any service by the employee to the employer in the course of or in relation to his employment, then that is out of the purview of GST law. Now let me put one very simple practical question here. If it is a Karnataka branch, right, my Karnataka branch, the employee of that person is helping me to form an opinion for one of the clients in Mumbai. So I'm sending him documents, or he or her, and then that person is doing research, and then that person is sending me the opinion, and then I'm reviewing it and then sending it to the client. Now he is the employee of the organization, but then he is also employee of Karnataka branch, not only of Maharashtra branch, or rather he is only employee of Karnataka branch. There is no I would say employment contract with Maharashtra per se, but the legal entity is same. Now in this case, the question will be whether they are outside the purview of the valuation of that particular service which has been provided by Karnataka to branch to me through the employee, whether that is covered under GST law or not. And there are various multiple thought processes on this. You all must be aware of that there are various advance rulings are being published under the GST law. So all these advance rulings are where the assessees in themselves going to the department and saying that, okay, you tell us whether you want us to pay tax or not. So that is a little bit like apne aap pair pe gulhari marna kind of situation, wherein you are going and asking revenue department whether I should pay tax on this transaction or not. And obviously there are both the types of view which are available at present. And so there are certain advance rulings in favor, certain against. Recently in newspaper, it was published, one of the against advance ruling has come on this, appellate advance ruling has come on this particular matter. But just to say or summarize my view, that employee, for the matter of GST law, for the purpose of giving services, there was an artificial bifurcation which was given under the law, where they talked about, okay, the branch and the HO will be treated separately for the purpose of providing services to each other. But when it is a Karnataka person providing service to a person in HO, it is still his employee cost need not be covered under the valuation aspect. Reason being, he is an employee of the organization, not only employee of that Karnataka branch, though you will be paying certain PFs, etc. of that particular state. But ultimately, it's a legal entity only for GST specific purpose of supply of services. They will be treated as distinct persons, or supply of goods for that matter. So not for every transaction, then you should bifurcate in this particular way. That is my specific view, considering legal provisions as on date, that if there is any exclusion which is given like this, then that exclusion has to be given priority. And what cannot be done directly cannot be done indirectly also. So if directly they cannot tax this transaction of employer to employee, or rather employee to employer, then even it cannot be taxed indirectly in the way of, branch and HO. So it's a little legal argument which you have to take and prove it in the court. But then there are arguments available to say that this transaction should not be taxed in the law. I'm not talking of this 2, 3A, B, 3B, etc. Those are self-explanatory and not much relevant to us. 3C also, 4 also I'm not discussing. 5 I will discuss, 6 I will discuss. So 6, 5 and 6 are wherein if there is a sale of land and sale of building, then it is covered, it is rather outside the purview of GST law itself. So one of the questions which I asked in the earlier stage is also that if it is a construction service, then there is a supply of undivided share of land, and another there is a construction service. So here they very specifically said that if it is sale of land means it can be vacant land, it can be developed plot of land, anything. If it is a sale of land, then that is outside the purview of GST law. And if it is a sale of building thereby means a completed building. Okay, so here the main meaning of sale of building would mean that it's a completed construction. So it's in the form of immovable property, then it is outside the purview of GST law. So even if you look at the history of this construction service from 2007 and then 2010 and then thereafter, whatever developments have happened under box contract service and the construction services put together, the thought process behind putting this entry is that if there is any immovable property which is being sold, then there will not be any GST law. Now, the question then will come that that is why I would say that if it is a under construction property that you are purchasing, you are paying GST. But if it is a transaction which is completely after OC, you are purchasing some particular property, then the builder will not levy you GST. So I have put down certain questions on this also in the next slides, I think so. I'll not discuss much right now, but I would say the crux is that if it's an immovable property transaction, and if it is a sale, it's straight away out of the purview of GST law, no need to worry about. So if, for example, if it's you have a builder client and if they are selling hundreds of flats after OC, no need to worry about this clause. You will not have to pay a single rupee GST on those transactions. Actionable claims other than lottery, betting and gambling. So if you remember the definition of goods, in the definition of goods, we said that it includes the actionable claims. Now here it is saying that, okay, actionable claims are though considered to be goods, but for the purpose of GST law schedule 3, it will be treated as it is not a supply at all. So actionable claims, apart from 3, they have said it will not be covered under GST law. Lottery, betting and gambling. These 3 are covered under GST law. And there the lotteries were even challenged constitutionally, etc. The matters are still in courts. But to say until now the position is that they have said that constitutionally they have the power to levy GST on the lotteries, and therefore they're continuing the levy of GST on this lottery, betting and gambling. Okay. So this is again not much, I would say, transaction which normally people look at. Now, these are few transactions which people would look at in a normal course of your consulting, litigation, or even compliance practice. If it is an out and out transaction, so if the goods are moving from outside India to outside India, so then the goods actually are not coming to India at all. It's not being cleared in India. In those cases, they say that it will not be treated as supply. So if suppose I am sitting in India and suppose Preeti ma'am is also in India, we both are having a transaction where I am supplying certain goods to her, subject to me having code of ethics and everything, or else if I'm not a CA, assuming I'm not a CA and I'm selling goods to her, and those goods, though I'm selling it to her, but the transaction which is happening is outside India. Okay. So basically the goods are moving from outside India to outside India. Then they are saying that it will still not be covered under the purview of the GST law. This is mainly to protect international interest because jurisdictionally, India will not be able to levy transaction if the goods are moving from outside India to outside India. So therefore, it will be treated as not a transaction of India, no GST on it. If it's supply of warehoused goods, now warehouse goods are also defined under the customs law, and those are mainly wherein the goods are not yet cleared for home consumption. So it's, for example, you've imported the goods, you have put it in either public warehouse, private warehouse under the customs law. Those warehouses are, I would say, governed by the customs law. So if there is a private, public, any particular warehouse that you have submitted your goods or you have kept your goods and you've not yet cleared it from the for the home consumption. So basically, you've not filed any bill of entry for home consumption. In those cases, it will be treated as warehouse goods. So if you're not cleared those goods for home consumption, until then, you don't need to pay GST. It's treated as it's not in India still. Okay. So whatever earlier transactions you have done, for example, you've done high seas, or you've done certain transactions wherein you will say that, okay, one person supplying goods to another when the goods are in the bonded warehouse, still not treated as supply under GST law. Okay. And last one is 8B is wherein the supply of goods by consignee to any other person by endorsement of document of title after the goods have been dispatched from port of origin outside India, but before. So again, before the clearance of home consumption, if there is any document through document of title, if there is any transfer, as I said, high seas, in those cases are also outside from the GST perspective. Okay, these transactions you don't need to pay GST. Now these are interesting cases wherein earlier they said that it is considered to be deemed to be supply, and later on the amendment happened from earlier retrospective effect to say that wherever there are transactions, so I would say this 7(1)(a) is very important. I'll have to just say that it has already come into effect from retrospective effect, where certain activities or transactions constitute a supply in accordance with provisions of subsection 1. Subsection 1 was, we saw, like the limb of transactions we discussed about, wherein all forms of supplies we discussed, and then we discussed about import of service, etc., etc. So, or the club and members, right? So, and the deemed supply. These are 4 clauses we discussed under the supply. So, then they say that if those activities or transactions are already constituting a supply under those particular clauses, then whether they'll be treated as supply of goods or services or not, that is referred to in Schedule 2. So Schedule 2 is only saying what is the classification of those particular transactions. Now under GST law, you might ask what is the need of classification, everything is covered, etc., etc. But still for typical, for example, is there a requirement of EA bill or not? You will have to see whether it is a goods or service transaction or not. Okay. So there will be typical, I would say, certain things which will be still different. Your time of supply may differ in those cases. So there will be various compliances which will differ if it's a good transaction or if it's a service transaction. So for that also, you will have to look after for this particular clause. And just to say that these are typical transactions where there were some litigations which were going on earlier. So therefore, they have clarified that it will be treated as goods or service. So obviously, if it is a transfer of title in goods, then it is a goods transaction. Then if it is a transfer disposal of business asset, it will be treated as goods transaction. And if it is again a transfer of business asset by a person whose registration still is surrendered, still is supply of goods. Okay. Except that if it is a business if it is business which is transferred as a going concern. Okay. That also we'll discuss a little bit in detail after some time. And then if its business is carried on by personal representatives, that's also outside the purview of GST law. Okay. So these are few transactions which are given on this slide, that these are transactions wherein they have said that, okay, either this will be treated as supply of goods or supply of service. The earlier slide was wherein it is treated as supply of goods. This slide is wherein all these transactions are treated as supply of services. Now, there are certain complications to it. For example, if you talk about restaurant and catering services, they said composite supply. Okay. And then they have started these wordings. Or works contract also, they said following composite supply shall be treated as supply of service. Then they said works contract is defined under this. So it has to be still a composite supply. And then you have to say that it is a works contract. Okay. So these I'm not discussing much in detail, but just to give you a brief background about this, that now this schedule in our view is only a classification provision or classification schedule. It does not say whether these transactions will be treated as supply per se or not. Still, whatever earlier we discussed, all those limbs of transactions have to be satisfied. So, for example, if it is a construction, which we were discussing earlier also, that land and building, land along with construction service and under construction flat, which we are booking. In those cases, here they are saying that it will be construction of building. Okay. And then they say that within intention, if it's somebody is selling, then even if a part of it is being sold before OC, then it will be treated as supply and therefore they will have to pay GST on it. So One argument or legal argument which we can, think of is that still now Schedule 2 is only for classification. So even whatever service they are talking, construction service they are talking here is only classification. So whether it's still the normal construction service which is in provided is even covered under the scope of supply. If not, then it is still not a supply. And as I said, it is a supply of land with goods, land with service, and therefore there may be an argument to say that it's not a supply at all. But it's a very, I would say, extremely aggressive view that we will take it. And better to therefore, and obviously, if builders are there, they will be able to collect tax and pay it to the government. So that's why the builders will not be able to take such an aggressive position. Once they have given possession, none of the customers will pay them even taxes. So therefore, it's better for builders to collect and pay. So that's why they are paying. But legally, there's a view possible, and you can use it whenever there is a structuring which is possible in your client's cases. Now, these are cases I have discussed again all these things in detail at the next slides. But considering want of time, I'm not discussing much in detail here. I'll just look at it if there is anything. Yeah, just this one point I wanted to highlight, that they have said that if it is a business which is transferred as a going concern, then there will not be any GST implication. So if you have any merger acquisition going on, then you try to look at it that whether you will be fitting in this definition of going concern or not. If yes, then you will be able to take it out from the entire GST perspective. So obviously going concern, what is the concept of it is something that you have to understand. In my view, the going concern will be wherein you are transferring the assets and liabilities, and as it is the entire business or a particular division of a business is being transferred, then it will be treated as going concern, and then you will be eligible for all the so you will not have to pay GST on that entire transaction per se. But you have to be careful because they've excluded it from the Schedule 2, which is on the classification. And then there is another entry wherein they have talked about that it will be treated as a service, because they have covered this as an exemption under the service notification. So it's a very weird interpretation. They are saying that if there is a transfer of business as a going concern, they say that it is a supply of service, then they treated it as an exempt supply under the particular notification. So there is a little bit debate or challenge there in terms of the legal position. So this also I'm not discussing much in detail. Yeah, whether resale itself is covered under this particular entry of construction of complex, which we are discussing. So my answer is no, resale is not covered here, because there has to be a construction service and there has to be intention for sale to a buyer, wherein it has to be done before OC. So your case is if it's a resale, normally if it is after OC, then there is no question that you will have to pay GST on it. Say Mr. A books a flat in an under construction building, and after 1 year he wants to sell his right in the under construction building. Then whether these rights will be treated as sale of immovable property or not. So it's a very difficult question to answer, I would say, because this is again a right in immovable property, which is not considered to be goods, but there is a big question mark whether it can be treated as service or not. My view is that it cannot be treated as a service. Anyways, Mr. A, who has booked the flat, is not doing it in the course or furtherance of business. So he should be still out of the purview of GST law. So, but yes, if it's a resale of under construction flat, then there could be complications which you might have to see. It will be always better that you surrender and cancel the flat, take the refund of whatever Mr. A paid as tax. And then if it's again the flat is resold to Mr. B, then Mr. B will have to pay the entire GST as under construction property on that particular flat. The temporary transfer of permitting, this I'm not discussing much in detail again. These are just, yeah. So this we can discuss a little bit. If it is a Tally, which is a canned software, wherein you are taking the educational mode free of cost. And then obviously we have CA, SCA, we are getting some subscription also. So now whether the subscription which we are getting, is it a service? Is it goods? What are we getting? So the answer to answer this, in my view, Tally is still a goods, which is still a software. It's a copy of the software which is being provided to you. If it is in the form of a CD, if it's a license which is being given to you to use the particular software or for a particular year, then it's again a license to use those goods. Therefore, it's in the nature of service, and therefore it can be treated as a service transaction. Even Schedule 2 also talks about saying that it will be treated as a service transaction. Now, this one particular entry, which I was discussing earlier also, that what they have talked about in this particular entry is this will be treated as supply of service. They're saying agreeing to the toleration. We had discussed one example in the earlier slides wherein we said that if it is a person, for example, Mr. A has compensated Mr. B because there was a crash of the car. So Mr. A must have done some damage to the car of Mr. B and therefore is paying some compensation to Mr. B. Now, in this case, the question was whether Mr. B will have to pay GST on that compensation which they are receiving. Now, that being a personal transaction, we never questioned. We said no GST on it. It's not in the nature of consideration. Now, the issue is that if Mr. B has agreed to tolerate the act that, okay, fine, you have, damaged my car, but I'm accepting it. And then if he's getting any consideration, can it be covered under this clause to say that, okay, I've agreed to tolerate a particular act of another person. And for that, I've got some money and therefore it should be taxable. So the very typical situation. Now, there will be various such normal commercial agreements happening every day in, day out with your by your clients to your their customers or vendors for that matter, wherein they must be paying some compensation to each other. So in those cases, you have to look at whether it was through the alternate dispute resolution mechanism, that is through the arbitration, or was it through the court settlement, or was it just out of the court settlement, just mutually decided that this compensation I will pay, or if it is mentioned in the agreement. There could be various types of I would say compensation that you might be receiving. You have to look at whether there was any agreeing to the obligation to tolerate an act. So if it was a court, if it was out of court, if it was a mutual thing, then all these cases are wherein there was a dispute. You never wanted that this should happen, but that happened, and thereafter you had to take a compensation and get rid of it, get rid of that matter. But suppose there is a particular agreement to say that, okay, like non-compete agreements, which we generally discuss here. For example, I have decided, or I have discussed with maybe you all that, okay, in the Karnataka region, I will never do my practice for 3 years. So for those particular 3 years, if you will ask me, I'm not giving, I will not be entering into that territory. And for that, you will be paying me some money. Then it is agreeing, I'm agreeing that I am tolerating an act, I'll not enter in those territories for 3 years. For that, I'm specifically agreeing and I'm getting some money. So it's a commercial transaction which is happening, which is not because of any particular dispute which happens between us. In those cases, it will be covered here, and then you will have to pay GST on it. And there's a circular also, which has recently come on this particular issue. Now, we will move towards a little bit on the, I would say, no, I am not much discussing again on this also. We discussed about the society. You all must be staying in some societies, and therefore this again becomes important. If there is a society, whether they will have to pay GST or not, considering that now there is already 71A, which we discussed, there was already 71AA, wherein they've already introduced one entry to say that if it's a transaction between a particular club or society versus a member, that is also covered under the GST law. So then there is a particular, I would say this particular judgments are there, wherein it was discussed that the society and members are one and the same, and therefore the concept of mutuality applies. But under GST law, they have specifically brought certain provisions to say that there is no mutuality concept under GST law. You still have to pay GST on it. Okay, so society, when is doing maintenance for the society and charging certain amounts for as a contribution, then you have to look at each and every nature of the transaction and decide whether there will be any taxability on it or not. But yes, legally, I would say that particular clause of deeming fiction is also under a challenge. Now we have discussed a lot about theory. We will also we have discussed with practical examples. Now we are further discussing how to show it in your GSTF 1 and 3, which is the most important thing. Now, based on the movement, that is either it is inward or outward supply, you will have to look at that, and then you'll have to report GST under GST law. And based on the taxability, that is whether it is taxable, exempt, or non taxable supply, you'll have to report it under GST law. So inward supply obviously is when you are purchasing. That entire is a separate topic that will be taken care of when the ITC discussion happens. Now, outward supply is something which we are discussing today completely, which is outward supply in relation to taxable supply means supply of goods or service, whether by sale, transfer, barter, exchange, license, rental, lease, or disposal, or any other mode made or agreed to be made in the course of furtherance of business. Now, this is the most important slide which I wanted to talk to you all about. Whatever we discussed until now is covered under either the taxable supply or the exempt supply, or third is the non-taxable supply. Okay. The bifurcation between three and reporting it to the government is very, very crucial. I will give you one very practical and live case which we have in hand. It's a strange case wherein it is a CHA and clearing agent, basically. Those are the people for whom we are filing this return. Now, what happens in these typical cases is that the books of accounts show the revenue of 100 rupees. The actual expenditure being done by them for clearing the goods of the clients is much more than their own fees also. So, for example, if it is 100 rupees their income, 150 rupees the expenditure done on behalf of the client. Okay, so 250 rupees in total being spent for that particular clients of the customers of the client. And this particular person will have income of 100 rupees and 150 rupees, then they will recover it from the customer. Okay, and that will be based on the actual documentation. Now, what happens is out of this 100 and 150, the question will be what to report where. So if it is a transaction with that particular person which is covered under the taxable supply, you will mention it under taxable. If it is governed by a particular exemption, if there is a particular entry under exemption notification, then it is an exempt supply. You have to report it as exempt. If it is not a supply, if it is a supply but it is not leviable to GST, then it will be non-taxable supply. And if it is not a supply at all, then it will be no supply transaction, not to be reported or covered under either of three. So to give you this example, that if for clearing the professional fees which has been charged is 100 rupees, then that is what is covered under my income tax law also, and I will show 100 rupees. Under the income tax and as per the guidance law notes of ICAI, they are supposed to report the net earnings that they earn. So out of 250 rupees that they spend, they actually earned 100 rupees under the, as per the ICAI guidance notes, they have the right to only report 100 rupees under income tax law. Under GST law, if I report 100 rupees, it will be a problem because of my invoices are raised 100 plus 150 rupees. And therefore, under the GST law, we will have to report entire 250 rupees as the GST aggregate turnover. And then we will have to mention that out of that 100 rupees is what is charged on for my professional fees, and 150 rupees out of that also will be maybe 20 rupees or 30 rupees which is exempt service. So I'll put it as exempt supply, and then balance is towards pure agent, because whatever that also will be discussed in further sessions, that whatever I have expended on behalf of client, and if I'm able to fulfill certain conditions, it's a pure agent concept. For example, I paid customs duty for that client. So obviously it is client's business, and he will obviously reimburse that amount of customs duty which I have paid on their behalf. There's a challan also available to it. So that is not a supply at all. It's not covered in the valuation aspect at all. So therefore, it is not covered under taxable, it is not covered under exempt, it is not covered under non-taxable supply. It is actually a no supply. Now, for some reasons, considering that under the GST law, when we look at GSTR 1 and 3B formats, there is no place to mention if it is not a supply at all. So therefore, the only thing that you can look at is non-taxable supply. Now, the question is, okay, let me first discuss this and then I will come back to the point which I'm trying to draw. So these are the screenshots which you will see. This is GSTR 1, which you are furnishing on the outward supply, where you are going to put down, if you see this window, your GSTR 1 is important and GSTR 3B is important here. These two are the windows which you can see. 2A, 2B, I'm not discussing. It will be discussed in your ITC lecture. And later on, we have one more particular session where all the screens are going to be shown to you. Now, this GSTR 1, if you will see, again, in the GSTR 1 also, there are particular tables to it. So if it is, for example, B2B transaction, if it is B2C transaction, B2C, if it is a large transaction that is more than 250,000 invoice value, and less, if it is like less than 250, then it will be B2C transaction. Others, then there are also debit credit notes which you have to mention if it is B2B, B2C. If it is amendment, then you have those other places where you can do amendments also. And there are also advances received and advances adjusted, because obviously for advance of service, you still have to pay GST. Okay, so this is a typical GSTR1. So therefore, your books of accounts, you will have to bifurcate between these two, which is taxable, which is exempt, which is non-taxable. If it is an advance received, not a deposit, then you will again pay GST on it. So those particular bifurcations from your trial balance is very crucial here. Now, these are particular typical GSTR1 I have put in, wherein within that what comes up is when you will see here, for this B2B supplies, you will have to mention invoice-wise detail exactly with invoice number, everything. When it comes to B2C, you will have to obviously mention only based on the place of supply, you will be able to mention the entire reporting. When it is your exports, then export with payment, without payment, you have to mention separately. And supplies made to SEZ unit developer also, you'll have to mention separately. Even deemed export for that matter, which is given under law. For example, you are making it to EOU units, right? So that is considered to be deemed export. Those cases also are supposed to be reported here. So this is a very typical structure of GSTR1. It's very important to note here that GSTR1 and 3B, the possibility of mentioning any amendments is very less here. Because the moment you have put it, this particular thing, the other person looks at it in their GSTR2B, they take credit based on this particular transaction which you have reported. So if there is any mistake, there are bound to be a lot of rounds of discussions and lots of rounds of adjustments that we are going to do. There is no provision in the law to revise the returns. You just have to amend those particular invoices as and when it comes. So it becomes all the more difficult for you to keep a track of those particular transactions. And then, for example, there are also complications of the portal. For example, if you have reported one transaction in B2C, for example, B2C in total from Maharashtra to Bangalore was suppose 2 lakh rupees for that particular month. I reported 2 lakh rupees as a place of supply Bangalore, and then I discharge IGST on those transactions. Now, later on, after 2 months, I want to revise the May month return. Okay, then what will happen is I can revise this B2C only once in my lifetime for May month. So if there are legs of transaction of B2C, I cannot say that, okay, today I amend one, tomorrow I'll amend another one. No. B2C, all transactions I've reported once and I can only amend it once. So I have to wait until all other people come and then tell me, okay, this is what the adjustment I want you to do. And then only you'll be able to do. For example, it is a March month, right? March month, you have so many adjustments that you are supposed to take care of. Every time you will put it in GSTR 1 and 3B, and then you will realize, oh, I didn't want to report it this way. I want to change the reporting. It's very, very crucial and difficult because in GST law, you have e-invoicing, you have e-way bill. Then on the top of it, you have this GSTR1 on a monthly basis. You have GSTR3B to pay taxes. And all these things have to match with each other. So suppose there is a mismatch between 1 and 3B. There is a particular rule which has come in effect, Rule 88C, under the GST law recently in December 22, which says that if you have not, if there is a mismatch between, for example, April month's return I'm filing today, and if there is any particular mismatch between 1 and 3B, then, and if they realize it and then they give us the system generated notice, if I either have to dispute that or I have to pay the liability. If I don't do so, then whenever I want to file my May month return, I'll not be able to do so. Okay, so either you accept it or you say that, okay, I am disputing the liability, but you have to take any action against whatever, if there is any mismatch between 1 and 3. Now, take a very typical transaction, that one invoice you have reported in GSTR1 of, say, 1 lakh rupees. Now, this particular invoice you want to amend, it was a 10,000 rupees invoice, you mentioned, say, by mistake as 1 lakh rupees. Now, obviously, in the month of April, when you raise this invoice, you reported in the month of May that, okay, 1 lakh rupees GSTR1. While filing a 3B, you realize this is a mistake. I changed it to 10,000 rupees. So there is a mismatch between my GSTR1 and 3B. I reported 1 lakh rupees as GSTR1 and 10,000 rupees as GSTR3B. So 90,000 rupees is a difference, for which I got a system generated notice and I did not check the portal. I then directly went to May. While filing my May month return, it did not allow me. Why? Because it said, okay, you had got the system generated notice, you have not replied. Okay, so that's very complicated situation which you will be facing in future as per the press release, though not practically right now on the portal. Anyways, right now also sequentially you have to file, but for mismatch, they're not blocking the portal right now. But in future, the way they have mentioned in the press release, they will block even the portal. So for that, my sincere suggestion to all of you is tell your clients and keep yourself also ready that you need to look at the portal every time. You need to look at the dashboard. You need to look at the notices. You need to have the email access. If there is any single email which is coming to client, any single message coming to client, ask them to forward it to you without fail. If you're missing one particular message, the communication is going, okay, and then you are actually realizing it much later. Even when people in our offices, when they file your GSTR 1 and 3B, they don't actually check the entire portal. And when you actually look at it, it is really too late to then reply to the notice. By that time, order is already passed. So my sincere suggestion to you all practically is that you please ask your clients that they should forward any message or email that they get. And your office should at least check, or if their office, based on your fees and your scope of services, you should decide who is responsible for checking the portal. Because otherwise, if somebody is not checking the portal, then again the bus is missed, and then you directly are looking at the order. Okay, and that has happened practically with various people in various cases. It's like every alternate day or 2-3 days, I get one case on this particular issue. Okay, so my sincere suggestion on this one. Coming back to this particular point, where if there is a mismatch between 1 and 3B, now the question will be, okay, they sent you the system generated notice here. The major point which you are going to see is that they have given you GSTR. Now you want to pay on this one particular lakh because 1 lakh was wrongly given, right? Other party might have intended to take credit or might have taken credit. When my example was wherein in April you have reported, now you are realizing in the month of May suddenly. When you are filing May return, you are realizing that, okay, this was the problem and I have not replied to the system generated notice which had come. Now the recipient by that time has already taken credit on that 1 lakh rupees. Okay. So therefore, now department is asking you either to pay or you have to dispute and then you have to go ahead. Assuming you don't want to dispute, you have to pay. If you pay right now, you will still again next month, you will again do amendment at least to make it 1 lakh to 10,000 in your GSTR 1. But you then again in the next month, you will face this mismatch because in 3B, you will not be changing anything. So because 3B had gone correctly. So there will be 2-month mismatch which will happen. And in the meantime, if you have to pay, you only will be able to pay through DRC 03, not through GSTR 1 or 3B, which is not through GSTR 3B, which is a normal procedure. So you will be actually paying taxes through DRC 03. Now DRC 03 is a funny kind of document where you're paying tax, but it does not get reflected in your 3B. It does not get reflected in your 99C as your payments done. So therefore, you need to keep a track of all DRC 03 payments that you're making. Okay. And then at the end, when you're reconciling, you need to keep in mind you don't again pay the tax on those transactions. Okay. So, and in this particular case, if you are, for example, you actually wanted to pay 10,000 rupees only or tax on 10,000 only. So you will actually amend in the next month. So you will dispute the liability. You will then amend in the next month the GSTR 1. So there'll be also mismatch which will happen in the month of May. So you will get system generated notice again in the month of May that now your transaction which you are reflecting in 1 is less and you have paid excess in 3B. So, and obviously DRC 03 does not come to rescue because that reporting does not come in 3B. Okay, so therefore it's a very typical and it's a endless circle situation that you will fall in. So you have to be careful that what you do is whenever you're having any amendment, put your transactions in GSTR 3B the way, and you keep in mind that there will be bound to be mismatch between 2 months. So once you have filed your 1 and 3B, have at least check on the portal once if there is any mismatch between these two, between 20th to 30th. And then you proceed further if there is any system generated notice. If there is a system generated notice, you have to talk to client to decide whether you want to dispute that invoice or not, because he has to check and then records, and then he has to decide whether he wants to talk to his vendor or not, etc. So it will take some time. And then you have to decide within a very short time that, okay, whether you want to pay tax or you want to just get rid of the lab, or rather you have to just dispute the liability. If you're going to dispute the liability, then again you will have to take further actions, and then once that is resolved, then only you will have to pay or you will get refund along with interest. So it will be very tedious procedure that we are discussing, I would say. And there are practical challenges to it. So my sincere suggestion is either don't have mismatch between 1 and 3B, or if you have any mismatch and if you know it's bound to happen, then you need to figure out the process to handle it properly. Otherwise, either client will lose or you will lose. So that should not happen. Composite and mixed supply, I'll just discuss 1 or 2 examples and then we will move further. Shubh Mithai Wala sells sweets like for example, Sev Bhujia, etc. And they're also selling these particular aerated drinks. Now, what happens is most of the times they are selling it separately, but sometimes they will have a combo price that okay, sweet namkeen with a drink, we will give it in this particular amount, etc., etc. Now, whether this combo offer is a composite supply or a mixed supply is the question which we have to determine. I'll just give you 1 minute's time to think. In this situation, if there is a namkeen which is being given with the aerated drink as a combo offer, is it a composite supply or a mixed supply? How to value, I'm not going to discuss much. And what will be the rate also, I'm not discussing much, but whether it will be composite or mixed. So just to give you a brief background, that considering the concepts of this composite and mixed supply, considering these concepts, the composite supply is considered to be wherein there are two people talking to each other, and one person is making supply, which is a taxable supply. Two or not one supply, rather two or more supplies are being done, which are taxable supplies, which are being done to another, either as together or as a combination, or but that has to be naturally bundled and it has to be supplied in conjunction with each other in the ordinary course of business. So therefore, we generally take the example of builders. Builders do, for example, take the clubhouse charges, right? So in those cases, you can say clubhouse is actually being made when they are doing construction. That is along with it. So it is supplied in conjunction with each other. Both are given together. And then it is in the ordinary course of business that many of the builders give this kind of facility to you. And it is naturally bundled also, because the same person who doing everything, and it's actually naturally bundled. He is giving you construction and then he is only the person giving you the clubhouse facility also. So those cases are generally cases wherein you can treat it as a composite supply. This again is a very subjective definition because there has to be one principal supply also. If both are, there are two supplies, both are equally considered, I would say, of importance, then what is principal, what is not a principal or ancillary supply becomes a big question mark again. So therefore, the definition of composite supply is a subjective definition. And it is also industry based. For example, if it's a naturally bundled or not, you have to look at based on the industry, how it functions. If it is a normal natural course of business for all those people to do this kind of thing or not. And then you will have to consider it to be a composite supply or not. So therefore, for example, what I'm discussing on the builder's case also, there is a dispute which is going on. Like as I talked about the clubhouse charges, there is one appellate advance ruling saying that, okay, this will be treated as composite supply. There's another appellate advance ruling authority which already has concluded saying that it is not a composite supply. So they are saying that construction service is different, these clubhouse services are different. Even so, and then there's another third angle to it wherein the society maintenance and other charges are being taken care of. Okay. So the concept of composite supply is very subjective and it's going to be litigated in future. So if you have any particular clients where these kind of combos which we discussed are going on, or if this kind of, there are multiple services being provided together or multiple goods which are being provided together, then you need to look at these concepts and decide the taxability. Also, there will be this. So now let's come back to this combo offer and then look at this mixed supply. If there are two or more individual supplies and if it is made in conjunction with each other for a single price, and if it is not a composite supply, then it will be treated as mixed supply. So if it is, in this case, the sweets and aerated drinks generally are not considered to be supplied together always. So therefore, it's not a normal industry practice and it's not a composite supply. The moment you say it's not a composite supply, then you will come to mixed supply to say that there have to be two or more individual supplies. Yes, in this combo case, it is two or more individual supplies. It is made in conjunction with each other. Yes, it is made in conjunction with each other. And then it is for a single price. So if the combo is for a single price, obviously generally combo is made for a single price so that you get, I would say at less price, you'll be able to consume two particular items. So in those cases, it is a fit case. It might be a fit case for mixed supply. In that case, what happens is the highest rate is being considered even for the principal. So both, rather, even for the other supply. So in this one particular case, which I have talked about, wherein there is the aerated drink, and there is also sweets. It will be a case where on sweets also you will have to pay the tax which is levied on aerated drink, which is 28% plus the cesses. Okay. So it's very, very complex sometimes, and your pocket can actually be quite deepened with these kind of provisions. So you have to be, when you are having these kind of transactions for the clients, client to look at GST implications whenever they're coming up with any such incentive schemes or any such kind of beneficial kind of schemes for the customers. So otherwise, sometimes it might, it might fire back to you. So this is something which I wanted to discuss. Yeah, fine. Now, only thing which I had to highlight here was we discussed about taxable, we discussed about exempt, and we discussed about non-GST supply also, non-taxable also. So now non-taxable and non-GST, both are same or not is a question. Okay. In the GST law, the definition is given as non-taxable supply. When we look at GSTR 3B, the words which are used are non-GST outward supplies. And when we look at GSTR 9, they talk about non-GST supply, which includes no supply also. And I just discussed the distinction between these two. That if it's not a supply, then it is covered no supply. If it's a supply but not leviable to GST, then it's a non-GST supply. So then in GST law, there is a disconnect between non-taxable supply, non-GST supply, and no supply. And at present, there is less clarity. So what happens is it is a non-taxable supply and non-GST supply we treat actually today at par with each other, because there is no concept called as non-GST supply in GST law. It's only in the forms, and in the law there is non-taxable supply which is not in the forms. When it comes to no supply, then it is very typical case that the no supplies are not to be reported in 3B technically speaking. But in GSTR 9, they have included that no supply also should be reported as non-GST supply. So it's little complex structure that they have come up with under GST law. My suggestion would be that if you have exempt supply, report it properly, because I have a very practical case where just because we have not reported this exempt supply, just because which I was discussing about that 100 rupee and 250 rupees, that just because this 250 rupees is being reported, okay, in 1 year, and in another year, when we reported earlier, we used to report only 100 rupees. Department has come up with demand on this 150 rupees. So we have got 10 crore rupees demand practically today in hand for this kind of transaction, which is not a taxable supply at all. Okay, we explained it to them that it is a non-GST supply. We have written letters to them. We have given detailed explanation. Still, after that, we have come up, the department has come up with a show cause notice on this subject, saying that you have to pay 10 crore rupees on this non-GST or non-taxable supply. So it's a complex subject. Keep in mind that you need to report it properly. And even after reporting, you need to justify yourself properly. And then you will be able to come out of all these things. And whenever we are looking at the litigations until now, even service tax law or GST law, what we have seen mainly is that people are not able to focus on the reporting part so much. And because there is less reporting or no proper reporting, because of that, there are typical issues being faced under GST law. Okay, I will just like to now end this session. Just give me a minute's time. Yeah, so this is the last slide which I wanted to discuss, that if there is a supply which is happening, one example we can take, if there is an overseas supplier, if from there the factory in India is importing any particular goods, then in those cases, we will be paying BCD, and then he will be also paying IGST on that transaction. IGST, whatever as a factory they will pay on import, they will take the credit of it. Then if they are also purchasing from local suppliers, then they will pay CGST, SGST on those particular transactions. If then they send these goods to the warehouse and then to distributor within the Maharashtra state itself, then they will again pay CGST, SGST, because it's a local transaction which is happening. The movement of goods is also local here. Now, if we look at it, if it is exporting the goods further, then obviously the goods are moving outside India, and if all the conditions are satisfied relating to export of goods, then it will be a transaction not leviable to GST. If it's this factory further distributes it to the other states, like other states distributors are being given, then the transfer from the factory will happen to this warehouse at IGST, and then warehouse will then distribute, rather warehouse will further distribute to their other distributors and other people at in their state as SGST of that state, not of Maharashtra. So then typically it will be like, for example, the goods are transferred to Gujarat, then Gujarat CGST and SGST will be charged on this transaction. And if it is a typical sale from factory directly to a supplier or who is outside Maharashtra state, then it will be an IGST transaction which will happen. So this is how the supply chain is actually going in India. In this case, you have to look at two things in place of supply. Whether to charge CGST, SGST or IGST on any particular transaction, you need to look into what is the location of supplier and what is the place of supply. These two things are important. Most of the times people discuss about the place of supply, but they don't look at what is the location of supplier. Please look into if there are two branches, who is the person who is privy to the contract, and based on that you decide who is the supplier, actual supplier. Maybe physically the goods may move from branch, but it may happen that preview of contract is between the head office and the assessee or the customer. In that case, there is a possibility that head office becomes the location of supplier, and in that case, even though the goods are moving from one state to another, it can be still a transaction of CGST, SGST. So those typical transactions you need to take care, and you need to report it properly in your GSTR 1 and 3. So with this, I would like to thank WIRC, rather ICAI, and also the Women and Young Committee, wherein I was given a deliberate time, and I would say quite a detailed time to discuss the issues which we are facing day in, day out. So thank you so much, Preeti Savla, and thank you so much, ICAI and Women and Young Committee as well. Thank you.
All right, ma'am. That was absolutely our pleasure to have you on board, ma'am. Ma'am, can we just take two of the questions, please?
Yeah, we can. If people are ready, then no.
Yeah, sure. Ma'am, the first question is there GST on arbitration award?
Okay, very interesting question. As I mentioned, so if it is in the form of liquidated damages that you are getting any money, so you have to look at the Contract Act, you have to also look at the Arbitration Act, and then you have to also read through the decree which you receive for the arbitration process. If you are able to say that it was whatever amount was received was towards a dispute, generally in arbitration, what the award that you get, you have to, of course, look at each clause separately. It's a detailed study to be done. But in general, if I say it will be a dispute which will happen, and in those cases, you have not agreed to tolerate any act, and therefore it will not be treated as supply. It is also clarified in one of the circulars which was released in August 2022. So if somebody has paid taxes on it, then you have an opportunity. You can inform your clients and you can get refund from them for them. And you can get your professional fees for getting that refund also from the client.
All right. Another question is, ma'am, please clarify about the SEZ sale and sale to merchant exporters to be shown in GSTR 1 and GSTR 3B.
Okay, I have taken that slide. I'll just give me a minute's time. I'll again take back to the slide which I was discussing. I hope you are able to see the screen.
Yes.
Here, if you see this 6A, 6B and 6C are given separately in GSTR 1. So this 6B is typically where if you have made supplies to SEZ units or developers, then and that too with payment, without payment, you have to mention separately in the 6B. If it's a merchant exporter transaction, then it's a normal transaction with a less rate. It's not a deemed export. You need to report it in normal cases. But if it's a transfer, for example, you as so it depends on merchant exporter also what kind of transaction you're talking of. For example, I have supplied it to you, Chandni, and you are 100% EOU. Then it's a deemed export transaction. Then it will be reported under 6C. If it's a merchant exporter, for example, you are going to further export it and you have asked me to levy a short, for example, 0.1% of the tax. In that case, for me, it is not a deemed export. For you, it is for you it will be export which you will report. For me, it's a concessional rate of GST which I'm charging. Okay, I hope now the things are clear.
Absolutely, absolutely correct, ma'am. Ma'am, can we just go back to 3B as well and show the members?
3B, I don't know if I put down that particular thing. Just a minute. Just a minute. 3B, I had mentioned it at the end. Yeah. So 3B was here. So if you look at here also, so this zero rated. So even if it is, so now the way typically the forms are made, whether it is SEZ or export, it is covered under this 3.1B. But if it is an export, or rather it's a merchant exporter transaction, or if it's a deemed export transaction, everything gets covered under 3.1A. Okay, so it's a very typical form that we are discussing. 3B was not supposed to be there permanent. So it was made in a very different way. Now today we all are using it in a very different way, I would say. And government had come up with one new return policy, or entire structuring was done in 2018. It never came. And I don't think now it will come, because now in the last budget, last budget, they've already removed all the references to GST 2 and 3. So it's very clear now. 3B is going to be there forever. So on 3B, they need to improve a lot. Yeah.
Done. Ma'am, one last question we have. When is it beneficial to take composite scheme for professional services, that is example engineer? What are the GST implications and points to be kept in mind?
Yeah, it's a composition scheme, which we are discussing here, not the composite, because composite supplies different GST law. Composition scheme for professionals is given by way of a notification and also now in the law. But it is very, I would say, you have to pay almost 6% out of your own pocket. Okay. So we don't suggest this scheme to anyone unless the other party is not able to take the credit, and you are in a particular situation that you have to do it under composition scheme. There are restrictions also, because you then have to have a particular turnover limit, etc. So suggestion is always not to go for a composition scheme for professionals. For goods, still it is beneficial, but for professionals, having 6% rate is not making any sense. It's better that you charge and the other person takes the credit of it.
All right, ma'am. Then shall we conclude, ma'am, over here?
Definitely. I would be happy to answer any questions if they have.
I think we don't have any other questions. These were the only 3 to 4 questions that were put before.
Okay.
Right. Friends, we validate with this, and let me take this opportunity to thank Payal ma'am for such a prolific session, ma'am. It was, and each and everything I would say was ma'am unravelled so meticulously. These kind of sessions are always hand holders and refreshers kind of for the members, and you have, ma'am, really belabored it really well, ma'am. Thank you so much for justifying the purpose with which the initiative was taken up by the committee, ma'am. Thank you so much for sharing your thoughts and sparing your invaluable time, I must say, for the enlightenment of members, ma'am. Thank you so much once again.
Thank you, Chandni, and thanks to all of you. I wish you all the best, and everybody should flourish with GST practice for sure.
Thank you, ma'am. Thank you so much. My dear friends, we now close the session with this, and we shall meet tomorrow again for yet another intensifying topic on GST. Till then, thank you and have a good day. Bye-bye.
Thanks to you all.